Welcome back, YouTube. Thank you all for tuning in. If you guys don't know, my name is Nigel, and I bring to you finance information daily. If that interests you, please make sure that you stay tuned. Watch the whole video all the way to the end because that's where the goodies are at. Make sure that you guys are subscribed to the channel, liking the video so that we can get a broader audience, and commenting and letting us know if the information helped you, if you all are able to, grow from this information, what you guys think I should do differently, what you guys think I should keep doing. Just say hello. Let us know that you guys are out there. And with that being said, let's go ahead and get into today's topic. So today's topic is collections accounts and how they affect your approvals and what you can do to take advantage of knowing a little known system of FICO scoring and collections. By you knowing what banks pull what, how to use that to your advantage, you are going to be in such an amazing situation. All you have to do is sit back, listen to this, and forget anything that you've learned from one of these fake credit gurus who keep telling you not to pay collections. So, one of the main things that I hear all the time that is so fictitious, that is so wrong when it comes down to credit, is dispute, 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 and when you can't dispute, just leave things and let them sit there until they fall off. Don't ever pay a collection. Paying a collection is the worst thing you could ever do. Don't ever pay a collection. All of these fake YouTube credit gurus are telling you guys this. Don't pay collections. Don't pay them. Never pay a collection. Now here I am to prove them wrong. Right? So when you have a collection or charge off or something like that on your credit report, yes, the first thing you should do is dispute it, see if there's some type of inaccuracy, and get it removed. If there's a way to get it removed without paying it, of course, dispute it for inaccuracy, find an inaccuracy, get rid of it, remove the fallacy from your report. Boom, you're back to having a perfect report. Life's amazing. However, we have to remember when we're talking about credit, when we're talking about your credit score is a risk assessment to whether or not this bank thinks that you're going to pay them back or not. So when we can't dispute things and we don't pay them, what that shows the banks is that we are not going to pay our debt back. That's showing the banks that we are irresponsible when it comes to paying our debt. So if we're showing the banks, hey, we're not going to pay the debt, we're not even willing to try to settle it, we don't care about our debt. Once it goes to collections, it's there. Would you lend to you? Think about that. If I know that if this account goes to collections, you aren't going to pay it, am I going to give you money? And if I do, am I going to give it to you at a reasonable rate? No, I'm going to make my money back off of you and more and more and more, because I have to create a cushion just in case if you don't pay out the term of the loan. I have to make sure that I've made my money back before the end of the term of the loan, which makes you more likely to default again, and it makes my pockets lined from the last time that you defaulted. However, how do you get around this? Here's what you do. First thing you do is dispute anything that's on your report that can be disputed off, anything that you find to be incorrect, unfair, however it is, get that fallacy off of your report. if you can't get it off, what you want to do is find an institution. And when you're looking for this institution, you want an institution that you know you can build a relationship with. You can get a checking account with this institution. You can put your direct deposit there. You can get secured credit with this institution, a secured credit card, a secured loan. You can get a IRA, a retirement account. You can build other accounts with this institution. Now, once you build other accounts with this institution, you want to call your debt collectors and say, hey, can I either pay or settle to delete this debt? If they say no, the only thing that we accept is if you pay it or settle it, we're not going to delete it. Still pay it out or settle it out. Depending on your situation, if you're going for a house or something like that, you want to pay it out. If you're just trying to get credit cards and stuff like that, then you can settle it. Play the game according to what you need. If you can't afford to pay it, still settle it, because at least that shows that you did settle it. Now, what does this do? This increases your FICO score. This shows that you're willing to pay your debt back. And little known fact, this is going to be to your advantage to know this. If your bank pulls FICO 9, find out if your bank is pulling FICO 9. If your bank is pulling FICO 9, it's completely to your advantage, because as long as a collections account shows a balance under $100, it does not affect your FICO 9 score. So you could have 20 collections that you settled out. If you settled them all out and that debt collector reports settled in full 0, it does not show up on your FICO 9 report. It does not affect your FICO 9 score, therefore making you as good as or even a better candidate than certain other people who may have what you would appear to think is a better credit profile, because you've shown now that you are willing to pay that debt back. You are willing to be responsible, and that's what the banks want to see. So with that being said, thank you all for watching. Stay tuned for more videos, and I will see you guys in the next video. Peace out.